Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we have earnings. We have weird after-hours movers. We have an offering from Shopify. We're going to talk Disney reopening their park and selling out in Shanghai. We are, of course, also waiting for this jobs number that we expect will be historically bad. That's coming at 8:30, so we'll keep our eyes peeled for that when that comes around. Our guest is Jason Raznick. He's our founder and CEO. He will join the show at 8:45 and wrap us up heading into the weekend here. Joel, what's the word here in the overnight session? Another overnight rally?
Another overnight rally. We're currently trading up 25 3/4 handles. Call it 26 at 29.06 even. That opened at 82. They just touched the close, went below that at 79.75. Rallied up to 29.23, folks. Don't have much up there. If we really want to get excited on the upside here, the high close of the rebound's been 29.41, and the high of the rebound's been 29.65. Crude, quiet, down up 28 cents at 25.11. Gold in the green by 9 cents at 17.2670. Silver going the same way, up 21 cents at 15.80. Bitcoin trying to hold that 10,000 level, down $30. Those are the futures at 9,980. Triple D, it's a jobs Friday. Does it really make any difference?
This one matters. So all the economic numbers that are out there, this one does matter. The question is, does it make a difference for the bears? Because if the number is exceedingly high, which we expect it to be, in all likelihood, they'll find the silver lining and not sell off very much. If it's less, they'll rip it higher. So, I think it's kind of like a heads the bulls win, the tails the bulls win. Such a difficult market to be short in. You look at this market and you think all of the things you can worry about, they're all significant. But again, we've been in a trading range. A lot of these worries are baked in. We talked about this on the show, for the last couple of weeks. The market is accepting the fact that 2,000 people are dying a day. The market is accepting the fact that, the unemployment rate is hitting historic highs. The market is accepting of the fact that a lot of businesses are struggling to survive. This is the most accepting market that I have ever seen in my life, and you can thank the Fed for that.
For sure. And also, we've noted the overnight moves. That's where the movement has been. If you're buying the open, the 9:30 open, that's the wrong open to be buying. It is. Monday, Sunday night, we had the down open. But still, that turned out to be a pretty good buy. You never took out the pre-market low. But Monday evening, Tuesday evening, Wednesday evening, and Thursday evening, those were the moves.
Yeah. Gapped up over, and thanks to Endless Capital, who's tracking this on Twitter there. I didn't look at it that closely, but he says we've gapped up over 100 points in the last 4 trading sessions overnight. If you're looking at it, though, and like you were saying, if you were buying the open and selling the close in the last 4 days, you're not making any money, which is crazy because all the money has been made overnight.
All
these overnight moves. You're buying the 9:30 open on the SPY. If you're an intraday trader buying at 9:30 and selling at 4 o'clock, your day trader buying and selling, you think the market's been up, significantly this week. So it's been a pretty good week doing that. Not so fast. All of the moves have happened overnight. We've gapped up. Even yesterday, we were gapping up 30 handles. We closed up 30 handles. Day before, we were gapping up and we actually closed down. So you lost money. It would have been on Wednesday. Tuesday was a similar story. So we closed very weak. So the market has been pushed up overnight and then given some of it back actually intraday. So actually, if you just look at intraday moves, this week wasn't that great of a week for the market, but all the moves overnight, they're ripping them higher overnight. Some people are saying maybe there's some shenanigans happening overnight. I can't, speculate on what's happening overnight. I can just tell you that it's thinner, and the markets are obviously, being moved overnight.
All right, a lot of earnings reports, but before we get to an earnings report, good news for Disney shareholders.
This is going to be interesting to watch. So Disney is reporting that the first few days that the Shanghai Disneyland is reopening sold out almost immediately. And so it'll be interesting to see whether it's the people buying those tickets are actually people going to the park, or if they're going to be try to resell them on the secondary market. But the first few days that the park is reopening is sold out. Now it's only going to be capped at 30% capacity, so it's not a huge bar to clear for Disney. But the fact that they sold out immediately, that's what they said. Yeah,
that's good news. And then they're opening their outdoor mall or something in Florida. What is the place that they're opening?
Downtown Disney. Yeah.
So I think it's called something different now, but the old downtown Disney. So they're
Where's
opening that up. But it's funny, like the market wants any silver linings. So we saw that headline break about them opening downtown Disney, and Disney immediately popped up $2. And I was like, that's not the parks, it's an outdoor mall. So, obviously, an outdoor mall, we know they're opening some retail shops. So, it's a little bit different, probably not as crowded as some of these rides are going to be. So Disney's not out of the woods. It's unbelievable how resilient the stock has been, though. I wouldn't want to own at 108. I said I didn't want to own Lyft, Uber. I mean, this market doesn't care right now. The market is full on fear of missing out. We just want to own stocks. We think this crisis is over and we're going back to all-time highs. That's what the market thinks, because here we are. You look at the Qs, they're up on the year here now. There's full-on fear of missing out in a lot of stocks. So it's hard to be short. I would not want to be short. You're squeezing the shorts. We saw the squeeze in Wayfair. We've saw the squeeze in Peloton. We've seen the squeeze in a number of different stocks. It is a scary market to bet on the short side here. I think eventually some of this stuff does come to roost, and I think eventually we do come back down to earth. But I'm not betting on that. So obviously my long-term portfolio has a lot of cash because I have a lot of those concerns. But as a trader, I keep buying the dips. You know why? Because it keeps on working.
You've found a seller here. It looks like 108.5, 108.60. That's been bumping up against that for literally, let's see. You got up there really since 6 o'clock this morning. All of your 15-minute highs have been between 108.24 and 108.60. So if you're looking for a target there on the upside, you got to get rid of that seller. Nothing there on the dailies, to give me any, more significance to that. 110.31, April 30th high of the rebound, 112.70. But first things first, let's take out that seller at 108.60. On a pullback here, a quick dip, maybe you see the top of yesterday's range, which was also your close. That was 105.61, 105.57. So good day for Disney here. Not earnings low, 98.86, $10 above that if you bought the dip.
So lots of stocks reporting last night. One dip that has not been bought, and obviously it's egg on my face because I thought the Roku dip would get bought. I thought it would get bought faster than this. I'm not saying it can't get bought yet, but it hasn't, and it's still down. So give us the numbers for Roku. I think you got some support in the 120 area. Again, valuation will keep me out of the stock in my long-term portfolio, but I'm trying to look for the first little sign that they might buy the dip because they have on a lot of these different stocks and they might do it again. Maybe that play is going to get crowded, and you've got to be careful with all strategies. I'm going to say this too. This would be in my trading book. Somebody's going to end up writing my trading book about everything that I've said before I actually write it because I've said all the tips on the show. But when you've got to talk about crowded trades, and when something works again and again and again and again, eventually it will get crowded and then it will stop working. So you wonder if this buy the tech dip, maybe this is the first sign because this is the first one on the dip. Like we know the Uber dip even, was it last night Uber? Or was it the night before?
Last night.
Second nights.
Yep,
I think it was 2 nights ago, wasn't it?
No, that was Lyft 2 nights ago.
Yeah, Uber dip did get bought because it dipped on the initial report and they ripped it higher. The Roku dip has not been bought, which is interesting. So caution a little bit because it hasn't been bought immediately. But, sometimes it takes a day or two too. For the most part, these dips have been bought in the tech stocks almost immediately. Not the case in Roku. What were the numbers?
Yeah, this one is surprising here. So Roku reported Q1 EPS of a 45-cent loss per share. That is in line with the estimate. Sales beat though, 320 versus $306 million. Active accounts grew 38% on a year-over-year basis. Streaming hours up 80% year-over-year. They added just under 3 million active accounts in the first quarter. They
Again,
said all good things.
yeah, the quarter was fine. Again, price for perfection. It's why I sold my Peloton. Roku was literally ripped up 17 points ahead of this report in 2 days. So it was priced, very well. And you were opening up into you were actually at major resistance from January. You got the entire losses back from March. Stock is over double. It was under $60 a month and a half ago. Now it's 140. It was priced for perfection. You knew it was going to be a good quarter. Everybody knew Roku was going to have a good quarter, just like they knew Netflix was going to have a good quarter. Netflix sold off on theirs as well. So, but Netflix has come back. And if you look at Netflix now, it's very close to the highs. So it took Netflix a few days. Maybe you use that as a gauge here. Maybe it takes Roku a few days too. But I'm not short in these stay-at-home type of plays because it seems like they cool off a bit and then they just get hot again. So I would say if you are going to buy the dip on Roku, it's hard. I don't know. We can throw it to the level master, Joel. If I'm trying to buy the dip on Roku, where do I start nibbling if I want to do it?
This is what you do. This is
All
if
right.
you want to buy the dip, you gotta be careful here because after hours, right? They took it to 123.11, and I think I mentioned this on the after the close show or for the close. You got a pair of lows, 2-day lows right here, 121.77 and 122.51. You didn't quite get there yet. So that would be the area. The only problem with it, if it doesn't hold that area, your next daily low is 112.69. So you do have a double bottom there, 2 and 3 days. Kind of got there in the pre-market. So let's see. It's off the pre-market low, so quite a bit. So you might not get a shot at that as it's already went down there. But that's the area I like on it. I couldn't pick it up here at 126.20 with a lot of confidence. I'd rather try to pick it up on support.
I mean, a dip in this, if this thing fell another 15 points from where it currently is, it would still be in an uptrend from where it was in March. I mean, you could draw the purple crayon, take the Jeff Mackey purple crayon. I mean, you can really see it, even another 10 points down, you're probably still holding that trend. So you're buying at 126, you got to give it all a long ways down, almost to the double bottom at 111 and 112. That's a lot of heat. I don't like taking 14 points of heat. So I would like to get it in the lower 120s if I was buying the dip. Like I said, in some of these, you've been immediately rewarded. Like in the EA that I bought the dip on that one, I was pretty much immediately rewarded. I basically took no heat on it at all. I also bought the dip in Glue Mobile last night, and I took no heat on that at all either. I bought it at 826 or something. It sold off almost 80 cents on their report. I'm like, you know what, the stocks loved this report. Wasn't that bad, and it came right back. I still have Glue Mobile, obviously. I took it through the report, but I actually did it for a trade too. I was buying the dip. I sold the trade portion of it last night. Still have it in the long-term portfolio, sticking with it. I think it's eventually going over $10 just because this is one of those Michael Pachter calls, and does really well on the gaming stuff.
I think one factor that you got to consider here in Roku, being down, nearly $12, high of the rebound yesterday. So, I should have sold yesterday, the day after the fact trick. So, it's still, this thing was under $70. So even people whacking bids here at 125,
it's not really much of a dip.
Yeah.
Even though it looks like a big dip down 8% on the day, when you put it in perspective, like Spinner was just saying, it's just back to where it was a day and a half ago.
Yeah.
So it was not much of a dip, but the report was fine. So it's not like, media will find a fundamental reason to say why it's selling off. The bottom line is price for perfection. It was probably going to sell off no matter what they said.
S&P's leaking a little bit here.
Nervousness ahead of the report.
Yeah, I agree. 17 handles off the high, 29.23. After we hit that 29.23, we had a dip. That dip came right to mid-range at 29.0150. So if you're inclined to, to buy it or, to pick it up on this downdraft, I'm looking at 29.0150. A little bit of intraday support for you.
jump over here, other stocks reporting last night. There was a pile of stocks. We had over 230 stocks total reporting yesterday. None of the big names. We're kind
None.
of through a lot of the big names, but there's a lot of still interesting names out there. There was First Solar reported, Booking.com and TripAdvisor, I believe, both reported last night. They did not do well, which was somewhat you'd think expected too. You want to go to the Booking report here, Spencer, because that one's kind of interesting.
Yeah, we can. We can. We can go. We can do Uber. We can do Herbalife. But yeah,
And we'll do Uber
yeah,
too.
yeah. Okay, so BKNG reporting after the close yesterday. Q1 EPS $3.77 versus a $6.10 per
Huge
share
miss.
estimate. Massive miss for Booking yesterday. Sales 2.28 billion versus 2.31 billion. So not as bad on the sales, but just a tremendous earnings miss. And you knew it'd be bad. You knew
it would be bad. Just like Roku was priced for perfection, Booking was priced for disaster. And that's why you only see it down 1% this morning on an epic disaster of a report. So, and you do have some support down here. And the dip was bought on this too, because this was lower last night, Mr. Elconin. Bring up that after hours chart.
Real briefly. I mean, this thing is
The
so
algo is just like, holy cow, we have to sell everything. It's a horrible mess. But they weren't thinking. Where do we get down to?
1389.
Yeah, so we're already 40 points off the lows. So the initial news algo that hits it down 50 points on that wasn't taking into the facts that, well, everybody knew Booking was going to miss. Logic, sometimes can help you. That's the one thing about algorithms. And, obviously they're very effective with speed, but they don't adjust. We don't have, the Watson that's thinking on the fly. I don't believe that's at least out there anyways, that the algos are adjusting because of, new factors. And that's why I will tell you, we have over, we got 100 traders at Bright Trading, many of them very consistent every day. And, some of them do use algorithms to help, but a lot of these are still point and click guys too. And some of the point and click guys, and we have some great traders, point and click traders in our chat here at PreMarket Prep. So, I mean, you have great, traders that are still point and click. And the reason, and I've had, a lot of experience on the algorithmic side of it. I know some of these programmers in Fusion, I know some people over there that were doing the high frequency programming for a lot of the big guns. And, my buddy worked over there, a good friend of mine. And he used to say to me years ago, he's like, how are you still in business? Like, I've been trying to put you out of business for a decade. And, my answer to that is that a human being can adjust a lot quicker to new factors than an algorithm. The algorithm can do what it's programmed to do. But if something changes, factors change, there's actually, those algos could start losing money. And there's an advantage for a human being to identify that. And again, the algo is just hitting on random news. Oh, here's a mess. A minus B does not equal C type deal. And and then obviously they lose money on those. So in some cases it works, but and maybe it's still working because they're still running these news algos, but there's an opportunity there to identify, when you've got a crowded trade, a lot of the algos sometimes maybe don't think about the current factors.
Interesting thing here about BKNG too, and what you're talking about. And I usually don't note the volume too much on things, but in that bracket where they whacked it after the print, it traded 40,000 shares, a little over 40,000 in that 15-minute bracket. 39,000 of it was on upticks and 1,200 on downticks. So someone hit it very lightly, and they got it down there. And then the big boys, or the heavy volume traders, came in and took it right back up. So little algos hitting the way down, big boys on the way back. I don't know what to tell you about this stock. I'll tell you the pre-market low, and that was 1389. And then you got 1450 as resistance. You've hit that twice since the rebound. So anyone in between there, anyone's guess. Someone asked about Expedia, EXPE. Technically, I do see that 70 level that you're talking about, 69.91. Looks like you got some levels ahead of that. So just check out your daily levels ahead of that. You have, looks like you got a seller at, yesterday's high, 67.30. Let's take care of that first. And then 68.41. So just kind of quiet, consolidating, good support down at 63.
These are all going to move with the airlines. So when you're looking at Expedia and Booking and TripAdvisor, they're all going to trade together to a certain extent. They all do to a certain extent all the time, but even more so right now, because obviously flights and travel agencies, online travel agencies go hand in hand. I mean, yes, they do hotels. Yes, they do car rentals. But I mean, for the most part, when you're traveling, you're flying somewhere. So this is, just watch the airlines for leadership here too. We saw a little bit of that in Boeing yesterday. I would say, there is the argument, we've been trying to look for a bottom for a couple times. There's the argument. You put a little double bottom in Boeing yesterday. Also, we saw a little bit of life in some of the airlines. They didn't make new lows yesterday.
Still haven't. Yep.
They're still awful looking charts, but most of them were actually up yesterday. Just like the banks were up. I mean, all this trash seems to, and we're calling it trash, but not that they're trash companies, but they've been trash stocks for a while. And they all seem to move together. And I do believe when you start seeing the airlines pick up, you'll start to see the financials pick up. You'll start to see some of the retail pick up. That stuff's all kind of moving together. And then you have the tech trade. That is just buy any dip. We got to be in tech. This is where we're going to hide out. Eventually, that trade will be crowded too. I'm loaded up in tech. I still believe tech long-term. My long-term portfolio is loaded up in tech. You've seen the kind of stocks I've been buying on the pullbacks, the Microsofts and the EA, and, the stocks that I believe are going to be there, regardless of whether we're, in this social distancing thing for a prolonged period of time. But if we start to look like we're going to open, if we start to look like there's, that we have some hope here, some of the stuff that's really beat up will go up a lot more than the tech stocks.
True. Can we go to Uber here?
Yes, we can.
We kind of skipped over that report, and I want to do it right now. Uber reported last night Q1 an EPS loss of $1.70 per share. They missed the 83-cent loss estimate by a lot. Sales $3.54 versus $3.51 billion. So they have revenue, but the earnings aren't there yet. I don't think that they were talking 1 or 2 quarters ago about being profitable in the near term. I think that's out the window now. The CEO was on CNBC talking up Uber Eats. That's kind of been their saving grace here, but this is another one that you knew would be bad, and they did buy the dip though. So
they bought the dip on this one too. Where did we get down to last night, Joel?
29.50.
29.50, and then they just turned around and ripped it higher. So they bought the dip on this one too. I mean, if you think about it, and they're like, oh, the quarter wasn't that bad. The sales actually beat. Well, and that's what the bulls are trying to justify the move here with. But April sales, the CEO said, we're down 80%. 80, not 8%, 80% down. And then, what's propped the stock was on the call. They started saying, but we're seeing an uptick here. And we're seeing, and I believe he said, that over the last 4 weeks, we're seeing better, and up, 10%. Does that mean up 10% from being down 80%? Does that mean like it's still down 73% or whatever it is when you do the math? Is that what that means? Because if we're still down 73% on sales, that's not an uptick. And they ripped the stock on the fact that the CEO is saying, oh, it's starting to see an uptick here. We're up over 10%. I believe it was 10% or 13% he said in the last couple of weeks. So if that means, I don't know, I wish I would have been on the call because I would ask for clarification. Does that mean you're up 13% from being down 80%?
Yes.
Because that means you're still down more than 70%.
Who was the CEO? It was last week, I think, or maybe the week before that said like sales were down, or bookings were down like 98%, but they've bottomed.
Yeah, the bookings are down 98%, but they've bottomed. Okay, they didn't go down 100. We don't see them going down 100%.
They're not going down all the way to 0.
We don't see them going down 100%. I mean, and that's this market. It loves the silver lining. They turned around. The stock was down. They started talking about this stuff, and they ripped it higher. They're like, it's turning around. They were up 10%. And the media say, oh, the sales were up 10% in the last 2 weeks. From down 80%. Let's tell the whole story. Anyways, whatever. I have egg on my face. I thought the lift kept going up. The Uber, I'm not shorting these things because how do you short these rocket ships that, are just, on the hope trade and running with it? But I'm not sticking them in my long-term portfolio because I think these are still disasters. I think that April, May, June, July, August, September, October, November, December are not going to be good. Not the next month. I think it's going to be down for a prolonged period of time because there's people nervous. Yes, there's going to be people who take an Uber, but these sales aren't coming back to where they were in January or February. And maybe this market doesn't care. Maybe this market is accepting of the fact that some businesses are just going to have significantly less sales, and we're okay with that. Maybe they're accepting of the fact because Disney's rallying, because Shanghai's, sold out a bunch of tickets. It's
fading a little bit.
It sold out a bunch of tickets, and oh yeah, sold out, but at 30% capacity. So maybe they're accepting of the fact that Disney Park is only going to be 30% full. Well, that's good enough. Well, you know what? It's good enough maybe for shareholders right now. It's not good enough for the companies. These companies are still burning a ton of cash. Somebody said Disney is losing $1 billion a month right now. I don't know if that's true. I read that on Twitter. I haven't verified any of that information. That's an incredible cash burn. $1 billion a month. I don't know, like I said, if that's true. But if that's true, that is just the scariest thing, because you look at where Disney was 1 year ago with all the parks open and no COVID. And we were 1 year ago trading around 105, 110 before we had the big boost from Disney Plus.
Yep.
So now here we are, parks closed. We don't know when they're all going to reopen. Yes, they open downtown Disney. Yes, there's hope. But I mean, I just think there's so many better places for your money, safer places right now that we know are going to be okay. That's why money is really flying into stocks like Microsoft. Because you know what? Microsoft's the whole gaming aspect of it. That's why, you're seeing Apple come back, because people aren't getting rid of their iPhones. So you're seeing the big tech names that the purchases are more sticky, really excel. Disney has held up the best out of all the travel stocks, because Disney really, when you think about it, is travel and entertainment. It really is. Yes, they have some other aspects of the company, but for the most part, the big bulk of their money comes from people going to the parks and obviously making movies, so the entertainment aspect of it. And they have their own cruise line and stuff, but they have got a pass. They haven't got hit like, the RCLs and the Norwegians, because it's Disney. And you know what? They would raise capital very easy because they're Disney. So I get it. I'd get that Disney isn't going to go down. I would buy it if it went down to $20 or $30. They're going to be able to raise capital. So if it was a stock that lost like 70 or 80% of its market cap, in this, I would have bought it too, because it's Disney. So it's going to be higher. But again, they're at a point now, it's like they're not really pricing in that much disaster at all.
That's a pretty good tangent. You went from buying a dip in Uber to Disney. That was good.
They're comparable. I mean, they're not comparable, but their sales are down. I'm looking at companies that sales have fallen off the cliff.
Yep.
Disney and Uber's sales have both fallen off the cliff. Disney can take that probably for a long time. Uber, if sales stay down 80, 70, 60% for a long time, I don't know what that means. There's a huge cash burn. Maybe it doesn't matter. Maybe everybody can just raise capital because we're in this FOMO market.
Dennis,
I know the 80, or we got the jobs number. So
yep.
I got to go wide. I went on a tangent. Take it over. I'm going to trade for 5 minutes.
Well, we have a couple of minutes. We have like a minute and a half, but I guess I'll give you some numbers here.
I just want to give you real quick. Uber matched yesterday's low at $29.50. That low was $29.58. That really ridiculous pop took it up to $34.20. Just kind of a slow leak here. Level of control here will be that closing price from yesterday is $30.93. That absolutely needs to hold. Go ahead, Spencer.
All right, estimate for this number, I guess the consensus range, I'm seeing anywhere between 21 and 22 million jobs lost last month. That would be the worst since I guess since the Great Depression here. Let's see. During the Great Recession, the worst it ever got was we lost 800,000 jobs. Here we go. The worst monthly loss on record was 2 million in September of 19.
All of a sudden, the market's caring about this right now, folks. We're at 29.02. We're 20 highs 29.23. We are coming right into mid-range on the session here. So let's see if the bulls can defend here. Bulls need to hold this 29.0150. We're dipping a little bit, but we're back here. Jobs report imminent. They like it. Look at, they're ripping it again. We dipped. And now we're ripping. So whatever they're seeing, they're liking, folks. Right back up. We went down to, what was the low there in that bracket? Wish could have had a little bit out there. We did get to 29.0150, right on the nose. We hit that. Your bounce took you to so far 13.5. There you go. Your pre-market high comes in at 29.23. We are continuing to race higher. We are at 16.75. We just hit 17.18. 18 is the high here. 29.23. So far, by the dippers here, being rewarded. What do you got on the number there?
Yeah, the numbers were okay. I mean, I say
Yeah,
okay.
22.8% unemployment.
I say okay. They were horrible. They were horrible, but they weren't as bad as some estimates. So the consensus estimate for the non-farm payroll, like I said, was anywhere from 21 to 22 million jobs lost. Just over 20. It was 20.5 million jobs lost last month, and the unemployment rate came in at 14.7% versus a 16% estimate. So unemployment, I mean, historically bad. Estimates a little bit too bad. So, I mean, the fact that both numbers came in a smidge above the consensus expectation, I don't know how to interpret this. I mean, these numbers are horrible, absolutely horrible.
But it doesn't matter because we're going to concentrate on the price action. And right now, it really, before that number got a little bit nervous, 29.0150. Don't know if you could have gotten done there because that was the actual low there. And then you popped to 29.18. So you came up just shy of the high of the session. So we'll see. Those are your two parameters. I mean, absolutely holding 29.0150. Bulls are firmly in control for the remainder of the day. Really random walk here between 29.0150 and that 29.18 we hit quickly. But what would really be super impressive for the Bulls here is to continue this rally, take out the pre-market high 29.23, and then take a shot at that high close for the rebound.
So just to put this into some historical context here. So this is from Carl Quintanilla, tweeted this morning. The post World War II record for the unemployment rate is was prior to today 10.8% from November of '82. The highest unemployment rate during the financial crisis was 10%, October of '09, and the all-time record, which we didn't hit, thank God, I guess, 24.9% in 1933. So we're at 14, what was 14.7% here. So it's the highest we've seen as far as unemployment since 1933. I mean, just horrendous stuff.
Market doesn't care. Silver lining market. We'll throw the horrible estimate out there so that we can beat that estimate and the market will rally on it. You know, it's the same thing like on the DAS. Okay, well, we'll throw the worst case scenario, this 200,000 DAS, and then when we come in at 150,000, it'll be okay. And then they obviously got a little bit greedy and they jacked down 60,000. They're trying to jack it back up. But I mean, when you lower the expectations so far, we know just from trading stocks, this works in the real world too. You know, in the business world, you lower your expectations so far. Even like when you're buying a car or something, or you're buying something, you're negotiating. You go with this really low ball price, and it gets the other person like, oh, you know. Sometimes they'll just walk away, but sometimes it gets them thinking. And then you come up a bit, and they're like, oh, that's not so bad. Life is all about expectations, and this is the way the market is right now. I mean, we've got this, oh, we're better than the Great Depression, so we're pretty good. So let's buy stocks. It's absolute nonsense thinking, but that's how it works. And that's how this market continues to climb this wall of worry. And that's why I'm not short stocks. I'm not bullish. I'm not bearish. We're in a trading range here, but I'd say sell the rips, but I'm also still comfortable to buy dips. I wasn't comfortable to buy dips in March because it was ugly. And I didn't know, I don't think anybody knew where we were going when we were in the middle of March, when, we had the Russell fell almost 50%. I mean, it was a crash. We crashed in the month of March, which is incredible. 167 down to, like 95. I mean, not, I guess, for over 40%, but just a huge fall. So now everything doesn't seem that bad because we got all this bad stuff out in March and everything's like, we're doing okay. I don't know the second wave on this thing and that's why I'm going to stay in with a lot of cash. Well, I'm not coming in buying Uber and Lyft that are stocks that are they're really ground zero.
What, buying them before?
No, the valuations were insane before. And now you're going to come buy them when their sales are down 80%. You're buying Uber today. The people who are buying Uber this morning, and it's probably going to keep going up. Who the hell knows? I'm not going to short it because this FOMO thing can carry stocks a lot farther. It's got the story going. The story is, sales are coming back. Yeah, we from up 10% from being down 80%. Great. But the stock has come all the way back. We are now where we were at the beginning of March on Uber. So Uber falls from $33, $34 really in the beginning of March. So if you go first day of March, when this thing really started, down to under $14 at $13.71. It's all the way back up. So it's basically priced in that the crisis is over. I think it's wrong. I don't think the crisis is over. I'm not buying Uber.
Okay. Let's just take a quick look at the S&P's hit that level, and now they're just kind of leaking. So you found some sellers, you found some buyers, you found some sellers, and now you're almost in that range. So I'm going to stick with those parameters. I'm not going to put the Super Bowl hat on until we take out that pre-market high at 29.23. Hold it, for at least 15 minutes, and I'm going to try not to lean bearish until, we take out that low right there at 29.0150. That's your mid-range on the session right now in the middle. We were at just a quick look at CyberArk here. Someone just asked me about that. I don't know. Did it have any news today? Any earnings or anything? Or is it just trading up?
The entire sector was up yesterday. Let me see. I don't know if they had news.
Chart looks good.
It was on my shopping list. I don't know where the shopping list even is. It's buried here. I've actually filled a lot of the stocks. I should go find it. CyberArk. I got like 1 million sheets of paper with 1 million notes here, but I'll tell you, CYBR was on the list and still is on the list. I have not bought it. I looked at this a few days ago, like $98, and I thought about, man, if it's getting up over 100, it's going to look good. I missed it. I didn't notice it gapping up over 100. I like CyberArk.
Okay. I just not up on a little bit of volume. Someone made a print, but keep an eye on this 107.61. That was your March high, and you're right back up there right now. So once you got up to 106.57 yesterday, so this kind of looks like a Rob Hood chart, where it's up near the top, it's trading up. I don't know if I'm really going to go into, buying it up that much from the open, but above that, I mean, it's just a sticky area because you actually had 3 highs right there at that from 106.78 to 107.61. So hold it there, breakout. Maybe you see 110 there in the issue. S&P's back heading north here, up 31.50. So it doesn't look like they're going to hit this market. Maybe we're going to have the old close Friday on the high of the week, and good week for shareholders. And we can hold it.
Spinner making the good point for FTNT was the catalyst there. And
oh yeah,
there's so many earnings stocks there, and I didn't even look at FTNT yesterday. So there you go. Spinner helping us out there with why all this cyber stocks.
FTNT really and also FireEye caught some love on CNBC.
Oh my goodness! Last night time for
another
30-second rant. 30, and it'll be like 3
food.
minutes. But holy mackerel, does CNBC move stocks? They talked about this. And I don't know if people know they're going to talk about it or what, because it was up like 40 cents before they even started talking about it. And then they started talking about FireEye on CNBC, and all of them were giving it some love on Fast Money. It went for it was Michael Coe with the options, and he saw some option buys or something. Like this market is so hungry for any trading idea that's long. The stock goes from 12.40 last night to 13.25 in the next 2 minutes because we're looking at some options. Some people bought some options. I mean, and they say this on CNBC. It's showing you how much drive retail has right now because people are watching this and they're like, oh, they're buying this. I'm going to go buy this one. And it went from 12.40 to 13.25. What is that? That's like a 5-6% move in 3 minutes. It wasn't news. It wasn't an upgrade. It was somebody looking at some options and found some buyers of some calls. I mean, it's nuts. Anyways, it's right back down to where it was. But, the last night it was trading actively over $13 because CNBC and Guy Adami said it was his trade of the day, his closing trade of the night too, and that helped it out too. So, we love these guys. Love Guy Adami. They're all very good people, good traders as well. They are so influential right now. You have to, even if you hate them, you've got to listen to these guys because they are moving stocks. And they're not meaning to move stocks. They're just giving their opinions. There's nothing, like when Josh Brown was talking Peloton, he said he didn't own it. He was just giving his opinion, but his opinion is moving stocks. And Jim Cramer, if he says anything right now, he can turn a stock right around. Like Etsy yesterday morning was down $4 when he started talking about it. Etsy was down $4. And he said, I think it could go green. I watched Etsy rally 3 points in the next minute. Like it was down all morning $4. So it's not coincidence that all of a sudden it takes off 3 points. Jim Cramer said it could go green. They're taking a green right now. It didn't quite go green, but man, it came close. So it's crazy how much they move off of CNBC commentary.
And you also mentioned the retail factor that if it's a $300 stock or a $400 stock, or
those don't move.
They don't move.
They don't move hardly at all. And it's rare, but you see it sometimes where they talk about a bigger stock on CNBC, and they hardly move because people aren't going to buy a $300 stock, that are watching CNBC. It's funny. It's crazy how much this price can move.
All right, let's get back to some earnings here, Spencer. We still got quite a few. No super big boys, but some interesting reports nonetheless.
A couple more minutes before Jason's going to join us here. In the meantime, let's go to Herbalife real fast. We talked about this one on the after hours or the closed show yesterday, and they blew it away, plain and simple. Q1 EPS for Herbalife, 83 cents versus a 59-cent estimate. Sales of 1.3 versus $1.1 billion. So a sales and earnings beat for Herbalife last quarter, and the stock is just blasting off here.
Up 6.27. Wow. 43.24. That's a big move for that stock. I don't understand what they sell. Don't understand multi-level marketing. I just gave you the 43.90. You hit that quite a few times here in the after hours and pre-market. So clear out that seller. Probably actually has his order at 44, but he's hitting any bids above 43.80. That's your level. Way above the high of the move. What do I see sticking out here? Above that. Oh man, not much. That's all I can give you on that one. You had 43.91 and then 44.37. There were a pair of highs back there in January. So above that opens up for $2, but hands off on the long side.
I mean, Spencer had a good call on this. Spencer, you had the call on this. And what were you saying? Was it 2 days ago you were talking about this?
It was yesterday. It just basically that when the economy contracts, people who aren't working are looking for work and looking for ways to make money. And I do remember Herbalife doing really well during the recession during 0809. So it's just
people signing up to to get involved, just to
sign up
to get some money.
Right, exactly.
Yeah.
So I don't know.
That was a good call. It stocks up. I mean, that was a good call. It's thinking like that. Like if you can get ahead of the trade just by using your logic, and people say, why do you use logic? Because logic will get you into trades. I mean, that FLIR that we talked about, and and Mike from the chat brought this to us, a month ago, and he was talking about this when it was $35. He's like, it's thermal cameras. I mean, when we go to reopen, they're going to, need to, obviously do temperature checks, and this is one of your leaders in thermal imaging. And, we talked about this a couple of times on the show. And I've said, I've said it on the show. This is one of the biggest positions in my long-term portfolio. And in my swing trade portfolio too. I got nervous and sold half of it through before the earnings report. I need to start just taking stocks through the earnings reports because it seems like they go up no matter what anyways. I'm glad I took the Glue Mobile one through, and I've taken a couple other ones through Activision Blizzard. But I guess I just got to start not being nervous holding the trading ideas through the earnings reports because they continue to work. But I mean, this thing is up from where Mike was talking about it, at $35, I think, in our chat. It's up at $48. And why? Because you know what? They got a contract from Amazon. That was the big initial move or something. And GM the other day. It's just, you're getting ahead of the trade. You're thinking, where is the story going to go? Story is all about opening. I mean, these stocks, this FLIR Systems, is thermal imaging. So I'm in this right now. I'm long it. I'm planning on holding it for a bit because I don't even think the story's got hot yet, with this thermal imaging stuff. Yes, they're talking about it, but I haven't heard a lot of, somebody said FLIR was mentioned on CNBC yesterday. That would be the first time because I haven't heard it mentioned on CNBC at all. I missed that segment. But I mean, this is a stock that could get hot. So it's up again here this morning. So I'm sticking with it. I think the stock could go at $55.
It's just funny that you mentioned about Kramer and stuff, and then George mentioned in the chat the original guy was Dan Dorfman, and Dennis, you probably I know
Who's
Spencer's
Dan Dorfman. I don't know him.
You were probably still in high school. Spencer, I don't even know. Spencer, I don't even know. He might have been born. Yeah. He would come on CNBC every day at like 1:00 or like some specific time. And it would be, because I was market making in New York stocks, and then we had other people market making in NASDAQ stocks. And so everyone would be glued to the TV, and it'd be
What's he
like,
going to say?
Dorfman. Well, first of all, the stock used to have, you used to have to go super wide, because you used to have to be, it'd be a market.
Because you were making markets on it.
You were making markets. So, George said he got ran over once, and then you would like the Dorfman stock, and then I remember there was this internet fish company. That's what I used to call it. Diana something, DNA. And you would sit there. They had commission-free trading. And I had that stock, and it was really thin, and it was the Dorfman stock. And then all of a sudden you look on your monitor, and it's like, buy 5,000, buy 10,000, buy 10,000. And you're like, oh, my God, And then the markets would go wide, and then you'd have to, shake it out. But now that's just, he passed away quite a few years ago. But so
you got to, it's CNBC. So bottom line, CNBC has always moved stocks.
Yes.
When you get media, a big media person coming and talking, Kramer has always moved stocks.
Yes.
What the point I was making is I feel like they're moving them more than they ever have before. Like I used to think, because I've traded these things, and you think, Kramer mentioned something that's worth 1 or 2%. Sometimes these things go like, that NAT, that when he had that CEO, and that was just a great interview. But the guy was saying, "Oh, we're raking it in." That thing went up like 25% on the interview. I've never seen a move like that. That's got to be the most historic, biggest move I've ever. Well, there was a couple other ones, like Inseego was on there on Mad Money, and it really moved there too. So there is some stocks that obviously move significantly, and it always has happened. I just feel like they're moving them more.
Let's get Jason's thoughts on this. Jason Raznick is here, CEO of Benzinga. Jason, do you remember Dan Dorfman? I don't know if you do. Oh no, you're on mute.
He's got a new mic, and he's on.
He's got a new mic, but we can't hear him.
The mic looks awesome.
He's not saying anything now.
No, he is. He's talking.
He's moving his lips.
Yeah. Here, hold on. I don't know.
Bottom corner.
He's got a fancy. He's got a fancy new microphone.
It looks awesome too.
That looks amazing.
He's dressed to impress.
Try switching the inputs there. Yeah.
All right,
okay.
He's gonna figure it out.
He's giving us the 1 second. All right.
I don't see him talking. No, now I see him talking.
No, he was talking. So okay.
Now.
There he is. There he is.
But that's not what the microphone I'm using. That's the wrong microphone.
Well, I'm not sure.
The new mic looks awesome. I love the new mic.
I'm going to try to go back to the new microphone, but then I'll go back to this. 1 sec.
Okay. That's way before my time, Joel.
You got me?
Yeah, Jason, we're here.
All right, let's go. So Dan Dorfman, I remember him. I wasn't he was more in your time, Joel, but I remember the guy. But I have to say something about this Kramer thing. So when Kramer had the CEO of NAT on, or Inseego, here's a trade I used to make, guys. This is before Benzinga days. There was Kramer at Action Alerts Plus. He still does, a premium product of thestreet.com. And I was a contributor to Real Money, or a writer. I ran part of the Real Money products for the street. And one of the things before that, I was an Action Alerts Plus subscriber. I would get those email alerts of what trades he was making for his charitable trust, and I would buy those stocks because, like clockwork, literally 3 days, same day, a week later, those CEOs would be on the show. It was honestly the easiest trade that I've ever seen.
So he would write about it and then have the guest on the show and have the CEO on the show.
And then it's going to pump when the CEO's on.
So Spencer, more than write about it, it was buying it for the charitable trust. So I'd get the alert. Even if I disagreed with the trade, in which I did a lot, I bought it because the CEO was on, and it was a way. It wasn't like he would say we made the guy on, but the media covers what people, when relationship, that's what you kind of cover. It's how you find out about stories. So the NAT, I bought it at 310, right? And it went to 550. Why'd I buy it? Because Kramer 3 weeks ago on this chat room said, this stock is way undervalued. Actually, the CEO of NAT, Dennis, is the first CEO I've interviewed for Benzinga in 2011 or 12.
Can we get him on? I love that interview on CNBC. That guy was awesome. I was laughing out loud watching him. He was awesome.
Dennis, the answer is for sure he would come on, but he doesn't know to come knock on our doors. We have to go knock on his door. He would for sure come on. I would give you
He'd be a good one.
All All right. I'll reach
We're gonna
out
get
to
him. We're gonna
I'll
reach out to the
I'll reach
NATC.
It
out.
was my first interview in 2011, and how I got it, the PR team there reached out. It's like my dad has this line like, Jason, think you're gonna come knock on your back door? No, you got to go make it happen. And so he always just said his neighbor next door never got a job because he sat on his back porch waiting for him to knock on his door. And you just got to reach out. That guy's great. And I don't own an AT anymore, but that was another Kramer thing. So if you listen to Kramer in between the lines, there's some stuff you can get, and then you'll see the CEOs on. And Siegel's another one. I mean, that is one that he's been talking about for a good period of time. Another one that Kramer's been talking about for a good period of time, and he's had our fellow Michigan friend on, Jeff Lawson, Twilio. So like those are ones that, you know, you just have to pay attention to the little nuances, and then you can look. Now, yes, the market can go against you and all that. You got to be careful, but these are little advantages that you can take. You know, these are moves you can take advantage of if you pay attention.
I just brought up that Twilio chart, and that came over from yesterday. That came over from yesterday. Holy moly!
And wow. You guys, and by the way, that's Jeff Lawson. He would come on. I went to middle school, high school, college, and I used to actually go to his house to get his mom to tutor me in pre-calc because I didn't study for the test. And me and my friend Ryan Goodman, we'd go there the day before, Gal Lawson, his mom, and literally he'd be around the house doing some scientific thing, and him and this guy Ryan and I would be sitting at the desk with the CEO of Twilio's mom teaching us calculus. That's it. So and the CEO of Twilio, I'll tell you one other story. He ran for president at the middle school that I was at, West Hills, and they made a video. Him and his dad. His dad does like voices and stuff, and he's a doctor too. But they made a video, and he had all the presidents' voices, like George Bush, like saying vote Jeff Lawson. It was the coolest thing I've ever seen. I was in 7th grade. I still remember it. Jeff was in 8th grade, but I still remember that video. And he was always an entrepreneur, always figuring out solutions to problems, very inquisitive. And I think that's a sign of a great leader and also a great CEO. So I've been long Twilio for a long, long, long time, but it's because of him. And also the other reason I like him and the company is because he's had his share of failures. He did multiple companies in college, raised money. He took a little bit extra time to graduate, like I did doing a startup, but he went through more of the school of hard knocks. When you go through the school of hard knocks and you get more bruises, I think you're way better off when you're doing a company. So when Twilio's stock got killed and everyone's just like, you know, going nuts about it, I knew the guy would rise back up and the company would rise up. Nothing really changed fundamentally. I mean, you would think there'd be more competition at Twilio because it's a text messaging service, an API service. Why isn't there other ones in the space now competing? It's a good question because I don't really have that answer.
Jason, I don't remember if you said it last week whether you sold TAST or not, but they're getting an upgrade this morning from Craig Hallam to buy. You upgraded this thing a month ago.
Wow.
A buck and a half.
I did not know that. I did not know it. Got to buy it. That's awesome. So I bought TAST, Carol's Group, at 141 and then 161. It's now at 306. I sold about 25% of the position. So I bought more when it hit like whatever, somewhere in the twos. And now it's at 320. And I told you guys a month ago, this is a call option. It's either going to go to $10 or it's going to struggle and go bankrupt, which bankrupt's not the thing, but it just wouldn't move. So I like the risk versus reward. I like to have some flyers. And I know Dennis talks about this, but I like to have some ones that are, you know, you can buy a bunch of shares of that. And if it gets to 10, you have a huge win. So that TAST is a huge win right now. I still own it. I'm not going to sell it. I'm not going to sell it for a while, to be honest. And I'm going to, you know, I sold some. So I basically sold what it cost for me to buy the stock. So the rest is just profits. But to be honest, in hindsight, Spencer, I should have sold a cent. My friend is ripping on me because I sold too early.
Jason, and this is, you know, I'm the trader. My biggest problem is I get in the trades and I get in at good prices, but then I get out too early. I mean, you know, Kolb gave us that in Seago, and I got out of that one way too early as well. Question to you as a trader, and you're not obviously as active as I am, how do I learn to hold on longer? How do you hold on to trades like you're in this, you know, TAST, you only sold 25%, you're up, you know, 150 or 200% in the trade here now. Yeah. How do you hold on?
So it's a great question. It really, really is a great question. It's so.
I suck at it. 20 years and I suck at it.
No, I mean, I'll tell you. And you guys, I mean, I see in the chat room, but like you guys are gonna make fun of me, Dennis. I think part of it is having multiple accounts because, I mean, I'll talk about my losers too, guys. I don't want to just talk about winners, but I bought Google in the IPO, and I like right when it went public, and it was in a different account, and I bought a decent amount. I was one where I have never sold a share of it, and I like thought, and I don't even look at that account. About a year and a half ago or 2 years, I went to the account. I thought there was a mistake from there, like that it was so I couldn't believe what it's at now.
Yeah.
I really think part of it is not looking at it every day. I mean, I sold Facebook. So I've owned Facebook for a while, guys. I had a, I don't know, 250% gain or whatever. I sold it during this whole market malaise stuff. Sold it at 172 or something. And why do I think I sold it? I think it's because I saw it every day in my account and the main account that I trade on, and just gave me like, hey, there's better opportunities. In hindsight, I wish I didn't sell it. I wish it was in my other long-term account, because Facebook and Google aren't going away. It's one of those, and Apple. So why'd I sell some? I sold some Apple too. So I've had it for so long. I sold at 260. I sold like 5% of the positions at 7%. And again, if it was in my other account, I would never have thought about it. So I do think there's something to say. What are your stocks not stocks? What are the companies that you want to be a shareholder of? What do you want to own? What do you think people are going to still buy? I mean, I got rid of the Facebook because I'm like, in the short term, small businesses are not going to advertise as much. Local companies are all closed. So I thought I'm being all smart because local companies aren't advertising in Facebook local. So I think I'm being smart in the short term. But what I needed to remember is I have a pretty big gain. I mean, percentage-wise, a big gain. So there's taxes. And do I want to be owning Facebook 5 years from now? Well, the answer as of now is yes. So why'd I sell? So part of it is moving it to account that you don't look at the stocks all the time. And I don't know. That's my answer to that one.
I think the problem is I know I own it, and I have separate accounts for investing. I have my day trading account, which I'm trading around with. I have 3 accounts, and I have a swing trading account, which I don't look at as much. And I try not to look at my long-term investing account. The problem is when I like for Shopify, this was example of where I've messed up, and it's come back down a little bit. But
there's an offering on that, isn't there?
Yeah, there's an offering today, and we can talk about that after. But I bought Shopify. I watched the stock go up 100% in 3 weeks from April, and I'm like, this, just went from a $40 billion market cap to an $80 billion market cap. And I'm like, it just seems like so much money so fast that I have trouble not just taking that profit. So, I know I own it. I'm trading it. I'm looking at it all the time, Shopify, because it's an active stock. And I know I own it in my investment account. So it'd be nice to just take it off my screen, never look at the actual stock. But I know I own it, so I got to get out of my head that I own it. Maybe
it's
when I
true.
stick in my long-term account.
And Shopify is another one of those people were talking about when it was in the 300s and where it's at today. And you'd be amazed if you can time it, like sell at the top, buy at the bottom. It's just virtually impossible if you don't have a crystal ball. But I see some stuff in the YouTube chat room.
Sure.
One of the 2 things. One of the things for short-term trades, I go to Benzinga Pro and I go to the signals widget, and I use it to see what stocks are hitting 52-week highs during the day. Because usually the way I look at it, stocks that are hitting 52-week highs are going to keep going, because when you hit a 52-week high, you create new 52-week highs usually. If you start hitting 52-week lows, you tend to keep getting lower, and it gets worse. So I look at stocks that that have momentum, and I use our signals tool. Now, one more thing, I see some of the old stock picks. So this was one of those weeks that 3 weeks ago I was on, 4 weeks ago on, I told you Peloton, PTON. I bought it at 23, and I could show my account, but I bought it at 23.21. And I bought it because of the stocks that I'm trading are coronavirus plays. Too many of my friends' wives needed these Pelotons. And even like my sister, they have the treadmill and they have this other, and before Corona, I wanted to short Peloton, thinking that, the marketplace effect isn't a big deal. Millions of people on it. You can, Nordic Track can compete. But I went big into Peloton 21 to 23, and now it's at 44. It just sometimes you gotta you don't necessarily need to think what the future is. You gotta think, what are people not really understanding or thinking now? So it's that informational edge that is really hard to establish, and informational edges become harder and harder when more people are in the thing. So the thing that people think on Peloton is like, well, everyone already knows that some people are going to buy Peloton for their house, but they just don't know the grand scale. And the other one that I would say about that I talked to you guys about, and I got this one from Luke Jacoby, but I also investigated, and then I'll give you my next trade. But the other one that was New York Times. New York Times, I talked to you guys about when it was at 33, went down to 32, 31, 29, 30. I mean, it was down there, and now it's at 35.10. They had earnings. It played out literally exactly how we described, like almost exactly as Peloton. Peloton just had a much bigger gain, but right now websites are getting a lot more traffic because people are at home, and when they're getting a lot more traffic, they're also getting a lot more subscriptions. So, and we looked at numbers. There was no one really forecasting or bringing the New York Times numbers, revising them higher. So I don't want to ever say there's a risk-free trade, Joel. I don't. But this was the closest thing that I've seen to that kind of scenario when no one is forecasting.
You saw it with our traffic.
Yeah, exactly. Well, that's your informational edge, right? We saw it with our traffic. So we knew our traffic was up a lot. And so New York Times is a lot bigger than us and been around a lot longer. So if our traffic's up a lot, it was a good thing to, now you guys, you never know. So you never know, like on the conference call, they say they had a security breach and everyone's like, you never know. So I don't want people to think, hey, you leverage the house kind of thing, but you take probabilities. It was a high conviction trade. Now to be honest, I'm in this chatter. I'm not amazing at these high conviction trades because on those ones, I should buy call options. I should do this. But my problem with buying calls is I don't buy long enough dated ones and they'll expire sometimes. My thesis is right, the trend, but they're too short. So I bought the stock and I did well on it, but I didn't make a ton of money because I didn't buy the call options, which if my conviction's high, I think I should start trying to figure out how to buy calls again. And then the next trade, can I give you a future trade?
Yeah. Future. Yeah, for sure.
Because we can talk about ones that, I mean, I gave you a bad one. I sold Facebook. That was bad. So I'm not just telling you ones
What about Royal? What about these cruise lines? I mean, they're like dead in the water here. No pun intended here, but man, I mean, institution accumulation here in these things. I mean, they're trying to rally. This has been quiet lately. Just talk about RCL.
I'm all over that. Right before the show, I was studying it. So you guys know I was shorting the cruise lines from like 40 to 36 to 24, at least for Royal RCL. Now RCL, I believe, is like around $39. The 52-week high was about 100 and something, 135, I think. It's up there on the screen. So I want to short it again, Joel, because I think these are going to be longer than what, time will tell, but I'm not seeing the trading patterns I like in it. So when I shorted it before, I would see 2 days of a dip, Joel, and then it would go up. 2 days of a dip. I'm not seeing that dip right now. And so I want to short it hardcore, and I'm just not ready to stick my flag in on that one. I do think what's going to be annoying is that I'm going to screw up because they're going to announce something really bad and it's going to drop 30%, 40%. I'm like, oh, I knew it. It's one of those that I'm afraid I could hit 50 before that happens.
Yeah. If they come out with good news or something, I mean, you saw what happened to the market, midday yesterday. They came out with the same news on Gilead again about their drug, and it was approved in Japan, and market rallied again on that. That's actually when we made the high.
Too. It was the Moderna news too. The market. So for the vaccine getting a long ways, I think Moderna was more of a driver yesterday. But there's news that will drive the overall stock. Like your stock that you're in is very much affected by the overall headline on this virus right now. And obviously cruise lines directly impacted there. I mean, we get news of a vaccine. That's good for cruise lines, but really good news.
Great news. Remember, Moderna was a stock pick we discussed in here a few weeks ago when I was pronouncing the name wrong, but I was still long it, and I'm just staying long Moderna because it's a play on the corona. It's not a huge stock.
They're the leader right now for the vaccine. They're the only one that's got through stage 2. I mean, they're flying right now.
Yeah, so Dennis, I studied 4 of those companies, and the reason I like Moderna was the rapidity, their speed, their velocity for testing. They have a new technology, this RNA thing, and what I saw, at least in the video report and how they do it, was way different than most. So that's why I went in on that one. Again, I'm no scientist. Just, you get lucky sometimes in those ones. But I see the room asking me some questions here. Yes, New York Times is public. The symbol is NYT, and Benzinga is INSG. The thing that you guys were talking about is the news, so Royal Caribbean. I had this happen to me a long time ago. Washington Mutual is a public company. I was short it like crazy. I bought puts. I was short it. It was at $40, 41. And this is when they had all these option arms, and I thought they're going to take a huge write down. I'll never forget it. Terry Killinger was a CEO. He gets on the conference call. And this is when I'm listening to and paying attention really detailed on all these companies. He gets on, there's we're just taking a $1 billion write-off. Well, the market saw that as a positive. So it went from 41 to 48. I was like 26 then. And so I had 200 shares and I had puts and I lost $1,600 that day. And I'm like, holy cow, you know? So I covered my short. So like, maybe it's gonna go to 60. Well, from 48, then it went down to 0. But, you know, sometimes these timing on shorts, you got to be careful. You have to be have high conviction. And I had high conviction in Washington Mutual, but I was too young to realize that when it goes up, that's another advantage. It's an opportunity to go deeper in it. And that's how I looked at New York Times. New York Times, I started buying at 33, it went down to 29. I was begging for it to go to 25. I was begging. I would have loaded up the cart. It's like Warren Buffett saying the farm next to you, same price the guy sells it to you. I was begging for it. And those are the opportunities, like the Washington Mutual, when I, you know, got out too early, I should have loaded up the basket with it and shorting it. And my next little trades, and I don't have the picks. There's a couple that I'm looking at, but I'm buying today or Monday, but probably today, I'm buying 2 community bank stocks. 100% I am. And a guy who's an expert says I'm probably too early on it. But my logic is this PPP loan, so many people are using community banks. Their assets have gone up tremendously over that. Yes, there's going to be a short-term earnings gain because they got 5%, usually 3 to 5% on any loan they originated. But a lot of people who moved assets to the community banks or got the loan through it are moving the assets to these community banks. And no one's really forecasting higher. These community bank stocks have not risen like I think they should, because I know multiple people just from my relationships that are now moving more assets from the big banks to community banks. I think you're going to see a few surprises in them. And I have a few, like there's a few symbols I have, and I can tell you next week.
I would bring your attention to QABA, which is the Community Bank ETF. So if
you got to watch some of the ETFs. I just want to make a point here because it's really thin.
Yeah.
So yeah. I'd like to avoid all of the, if your ETF isn't trading 1 million shares a day, it's trickier, you know, because you could get, you know, you have to get in and out of this thing. You look at the QABA and, you know, it's real thin. I mean, we're talking about an ETF that did a few thousand shares yesterday. These thinner ones, I would, you know, there's so many ETFs out there. And I just want to make this point just to the listeners. There are so many ETFs out there. But if you go on these thinner ones, sometimes the spreads can be really wide and you can give up a lot of edge just in the spread. So stick with the thicker ones. If the ETF's trading under 2,000, 3,000 shares a day, it could be really hard to get in and out of those. So some of these are great products and the spreads are there, but make sure you're looking and you're not entering an ETF that's got a 50 cent or $1 spread, because some of them do. And those are tougher to get in and out of.
So a couple of the ones I am looking at though are P as in Peter, ACW, and HOMB SVBI. PACW is PacWest Bancorp. It's down from 35. It's at 13. They did cut their dividend, or 17 at now. They did cut their dividend, but they did the PPP loan. I think they're going to gain a lot of customers through this. At least, so I spent a lot of time surfing social media for opportunities like this. So I looked on Twitter and seen people saying, "I love this bank. I love, you know, PacWest." You know, I'm trying to find opportunities like that other people aren't seeing. Because if I can find them before other people, that's where you get your informational edge.
This is the best. It's the best use of Twitter. I mean, I do the same thing. It's funny, you know, me and Jason, you know, obviously, you know, he's running a business. I'm trading full time, but I do all the same stuff that Jason's talking about. These are great tips because you find that, you know, like, oh, here's a story. Here's a potential story that could get hot. And, you know, you jump in just like, you know, that FLIR I was talking about with the thermal imaging. You know, that was brought to us by the chat. You know what I did? I go to Twitter. I was like, well, what other smaller companies are there out there? And you can find them. People are talking about them on Twitter. And I looked in this like MARK, this Remark Holdings, and it's a small penny stock. But I saw this at 40 cents. And I was
MARK?
like, well, MARK.
I know.
And it was a thermal imaging play. And I bought
Surprised you bought that, Dennis. Usually
I bought a bunch of it at 40
stocks.
cents. And I still have a little bit. What's that?
Yeah. Usually don't buy penny stocks.
No, but I was looking at the could a story get hot here?
Yes.
And they're talking about, you know, what are the other thermal imaging? Because the story itself, I believe, a thermal imaging, we're trying to reopen the economy. So I think thermal imaging companies, anything to do with thermal imaging could get hot. It could get some media attention going forward. So you find these little stories on Twitter, and there was a bunch of people talking about MARK as being a play. I was like, I'll try it. You know, I just do a little bit. It's a speculative. It's 40-cent stock. You throw only speculative capital at it. The thing doubled in like a week and a half. So, I mean, there's opportunities by doing exactly what Jason Raznick is talking about, looking around Twitter and getting ideas. There's some smart people on Twitter, and there's some good ideas on there. There's a lot of bad ideas too. But if you kind of got, you're looking, if you know what you're looking for, and I'm looking for like, okay, well, what's a thermal imaging stock? I don't know them. I don't know these penny stock thermal imaging stock. Like, okay, well, people are talking about this one as a play. I'm like, okay, I'll try it. And you know what? It worked. And that was just from using Twitter, just like Jason Raznick just said.
And Dennis, and some of it's not just finding like the comparable plays. So this Pac West Bank, what I am trying to find out is if people had good experiences with it. If a lot of people got loans through it, I can look through data that they announce as a company, or I could actually look at customers of theirs. I could go to trust scores. I can go to review sites and look at the volume of how many reviews they got after the PPP loan and those kind of things. And then that's how I make my trade. That's how I got in. That's why I went into Peloton big. I had my friends, wives, and then I looked more, seeing like other friends and going down to Instagram, my new Peloton's coming. And so I'm looking for that social thing. When Apple came out with the iMac in 2000 and something, in the blue translucent cover, I went to CompUSA. It was a computer store back then. 3 weeks after
CompUSA.
Yep, it was CompUSA. I waited 3 weeks to after it came out because I didn't want the hoopla of the first week. I sat at CompUSA. I was 23 years old. I sat at CompUSA for 3 hours. I watched how people went around CompUSA, and I wanted to see if they would go to the Apple section, because the Apple section was always away from the PC section, and there was all these gray computers, and every computer is gray. So I wanted to see if people would go to the Apple section, because it's this weird looking computer, this big blue translucent holder. And my theory of what that happening was right. And this was not just because it was the grand opening of like the new Apples. So I went and bought that stuff. That's when I bought Apple. My, cost me an Apple was like $12 or something. And that was when I wanted to observe user trends and what they were responding to. It's the same thing I do now when I go and look at, what these stocks are doing and what these companies are doing. I'm not going to always do that. Like on TAST, I didn't do that. It was, it's like you're looking at trends, you're looking at opportunities, but that's how I mostly go about it. I try to look at the fundamental stories. Like Joel will use levels and technicals. That's his expertise. Everyone has their own.
The Peloton was the same thing though. That was we bought. It was just Lisa wanting to buy it in January. This is before this has all happened, and so it was just a kind of thing where, we started using it and liked it, and lost a lunch bet or two to Dennis on it. But just real quickly, we're on the line with Jason Raznick. He's the CEO and founder of Benzinga, the sponsor of our show. Jason, we got a few more minutes here. We get asked some macro questions here, and Gary's asked this a few times, and I know what I have my answer. What do you think will make this market go down? What because it's not 20% unemployment or 15% unemployment. What would really make this market go down?
Yeah, I mean, it's like we all want a crystal ball, and sometimes it seems so obvious when people are like, "Hey, this coronavirus, you're going to be locked up until the end of August," and and you think like these things have flown too quickly, too fast. I mean, if you look at the numbers, unemployment numbers are what they're at. Restaurants are closed. I mean, the economy in many sectors is not good. And so the fundamentals, like you guys were talking about Disney earlier. I mean, if we're sitting back here right now and we're 5 years from now, I think we'll look back and say Disney was such a no-brainer buy because they have that moat. They control the content. But right now, they're not going to be great for the next 6 months. So what makes the market go down? When more fundamentals come out, more people have a realization that they're going to get hurt on earnings. Things are going to take, are going to continue to sort of not do anything. Like companies' revenue growth is not going to be there. So eventually what happens is the earnings, I mean, companies are valued on a PEG ratio or PE ratio, but PE growth. Eventually you're going to see, the stocks are going up, but the earnings are going lower. So why are we paying 25 times earnings for a company that's normally at 6 times earnings? I made a concerted effort to move from a growth investment portfolio, which I was all growth, to more of an earnings investment portfolio. Like I would much rather someone pay me cash every month, every quarter. So what makes it go down is that eventual those numbers not following. So earnings not following. You're going to have short blips when stuff negative happens. Now, as Dennis said earlier, Joel, if the vaccine comes out, then all bets are off, right? All bets are off. So it's like no one's going to know that. And after something happens, everyone's be like, it was so obvious. It was so obvious. It was so, and it's just, It's not going to be obvious. That's why I think you buy good companies and then you do a little bit of speculative stuff. That's what Dennis did on that remark, and that's great. And like, if you're in the chat room or you're on Benzinga Pro, you'll see some of those opportunities before they come about to the world. And that's what we do here. But Dennis didn't mortgage the house on it. It's taking a little dose, putting it in there. And the hardest thing I think in this whole market, Joel, is buying great companies and not looking at them again for a long time, and then having your speculative portfolio. So that Peloton one was a timing play. When Corona came, what's happened, I think Peloton was probably the biggest no-brainer buy I've ever seen in my entire life, honestly, or one of them. New York Times was, but Peloton as well. You just didn't know if it was already accounted for in the stock price, but it wasn't at 22. So at that point, the question is, should you have sold it the day of earnings at 37? That's the only thing, but I didn't sell a cent. And whatever. So, yeah, I mean, that's
okay, Dennis. And I mean, I think you and I mean, obviously a big second wave. I think that the market,
the potential's there for that.
Yep. Yeah. But that, the vaccine versus the second wave, and, right now getting the economy back going, and that doesn't seem to be a problem yet. So let's keep our fingers crossed.
Nobody knows how this ends. Like, nobody knows what the ending result of any of this is. You can speculate, okay, yes, we're going to bet on America, like Warren Buffett says, and eventually America will try. And in all likelihood, that is, going to be the case. But we don't know how long. We don't know how many companies, eventually could suffer or even go bankrupt during this time. Maybe none. Maybe it's, the bulls are right and we're all just going to get a vaccine and it's all going to be okay. Or maybe it's not going to be okay. But the way I've positioned myself, Jason's talking a little bit about this too, is I'm looking at companies that I'm fairly confident they're going to be okay, even if we are in social distancing for the next couple of years. That's why, like we've seen, this run into like the Peloton, like Jason was talking about, or, the gaming stocks, or Microsoft, or, some of these cash-rich tech stocks that can stay, or Amazon that can even thrive in social distancing. So, you got to position yourself for the unknown. And that's how I'm trying to position my portfolio right now.
And guys, this isn't easy. Like, would the average person know Jeff Lawson, the CEO of Twilio's experience? No. I mean, like, I look like that's hard to know. Do you have a fighter? Do you have someone that has had, setbacks before and how they overcame them? We all say people have setbacks, but, he had companies where he raised 15 million and went out of business. That really prepares you for the future. And that is opportunities, but it's hard to get that deep on companies. But if you really go that deep, you get an informational edge. And I can tell you about more stories of informational edges, but like that is some of those informational edges that can really make a difference. I mean, Benzinga, we have alternative data where we see sales numbers and different things. And like, those are informational edges. And a lot of people have that kind of stuff and know how to search it. I mean, if you just do what the herd's doing, then it's hard to stand out. So you gotta be wrong a little bit. A stock is not meant to go up every single day. I mean, when I bought that New York Times, it went down every day for like a week. And the guy who gave it was like, okay, I'm not giving you any more stock picks. I'm like, no, your thesis, yeah, Luke, I'm like, your thesis is sound. It's just, the world doesn't know it yet. That's the way I felt.
Nobody gets the timing perfect. It's very hard, very rare to get the timing perfect. So you got to be able to take some heat, and you got to be positioned small enough sometimes so that you can take the heat. I see newer traders do this all the time. They get a thesis and they get really big in it, and then they can't take the heat and they stop themselves out at the bottom, and their thesis was going to be correct. They just couldn't hold on long enough because they couldn't take the heat that they were taking. So I would say you want to be big enough that it's worth your while, but you also want to be small enough that you can take the heat. So find that comfortable spot where, hey, if I get a 3, 4, 5% drawdown in this market, 5% drawdowns can happen overnight. I'm going to be okay with it. So, obviously contingency plans, you don't want to get, stuck with something your thesis turns out to be wrong. But at the same time, you want to be able to hold long enough for your thesis to play out.
What about Dennis? What do you think about buying a margin?
I don't. I trade on margin.
Well, yeah.
I day trade on margin, obviously. But in my long-term portfolio, I don't, because I had a conversation with a private banker yesterday. And they were talking about, the clients that buy on margin. Well, that and you can go 2 to 1, and you go all in. But when you're jumping in and buying on margin, and you're in a long-term investment account, and the market falls 50%, which it did during the financial crisis, your account is gone. It's gone. If you were 2 to 1 margin and you're just holding on, and the markets fall by over 50%, that's it. I mean, that's over. I mean, and here you are, the financial crisis, the markets are making all-time highs, and you lost all your money during the financial crisis because you were invested on margin. You want to use margin for trading, that's one thing. And that's why I still stay diversified in my trading portfolio too. For the, because people will come in, they're coming with a $50,000 account and they'll buy $100,000 worth of Biogen because they think this is going to be the stock that goes. Biogen Alzheimer's drug comes out overnight and is a failure and the stock falls 50%. Well, you just blew out your account. So I like to stay diversified, not only my investment account, but my trading account. So if you're using margin, diversification is very key.
Yeah, I hear you. I sometimes do margin, but like I didn't do it on, Peloton, and I was like annoyed with myself because I do probabilities, and I was like the confidence I had in that one was so strong, and I just feel it, so yes, I mean, Warren Buffett says don't buy margin, and I didn't, but like obviously in hindsight, Dennis, I wish I did. But no, I hear you, because it could go the other way. You got, even though I say it seems so obvious, that's the tough thing about this. Even though I say it seems so obvious, there is the probability, maybe it's 10% that CFO could resign or something, whatever, or Peloton could have said that Nordic Track is coming into the market share or something. So I don't know. So you're probably right. Safer than sorry, right?
The trade can always go the other way. You can have the best thesis in the world and something might not play out. Like you were saying too, the stories change. Me and Jason, I feel like we're the same person in this Peloton trade. I hated Peloton. Before this COVID thing, I was like, I called it on this show, like back in like November. It was a bicycle with an iPad on it. I was like, this sound feels like GoPro Part 2. But you know what? The thesis changed completely when the virus came in. And I was buying Peloton as well. And I was long it. Where I screwed up was I didn't want to take it through the earnings report. So I ended up selling it at $38 the day before the earnings report. And obviously, I should have took it through the earnings report.
You should have talked to me. My numbers that I had for the sales were so much higher than anyone else. I did tons of research on Peloton, tons of social media research. I saw numbers. I thought they were going to – I actually thought the day of the earnings, it went to like 44. I actually thought before the earnings that it would hit 50 after the earnings. I was like confident in 50. It went 44, but yeah.
I was confident in the earnings too. It was just a matter, was it priced for perfection? It had run up 25%. We saw, stocks with good earnings reports. And obviously I use other information, like I'm looking at the other stocks, what they've done. And we've seen stocks with really good earnings reports like Netflix sell off because they were just priced for perfection. This is a stock that ran up 25% in 4 days before the report. And I talked myself out of it. And that was my mistake. I was convicted too, just like you were on the earnings. I mean, I'm friends, same thing. Everybody's buying a Peloton. You could just see it. And, I should have held through it. So I screwed up. It's still a good trade. I just didn't want to hold it through the report.
It's like how I talked myself out of getting out of my Facebook position. I mean, I sold the entire position, which was just so dumb.
Well, I did too. I sold my Facebook as well at 179 for the same reasons you were talking about. That exact same reasons you were talking. I talked myself out. Maybe we talked to each other on that one. Yeah. I did the same thing. I sold my Facebook at 179. I wish I wouldn't have. And that's
maybe I have a leak on your account, but I didn't sell the Peloton. Except I missed your the remark. I've been watching that one too, and I just been so annoyed that I missed that one. So, but yeah, I mean that's how we trade. And someone's in the chat room asking about Benzinga Pro. Yeah, I go in that chat room during the day sometimes. I will buy one of these bank stocks. Someone did send me. They said, "Is this good play?" Emeritus Bank, ABCB. So I'm on their site and looking them up. I actually may pick this one up instead. Whoever put it in the chat room, Ameris Bank, it looks interesting. And I know a lot of people are asking about Tesla. I watched the 2-hour interview or listened to the 2-hour interview with Elon Musk and Joe Rogan. There was really nothing there. He really didn't go into anything on the car, just that, the Roadster will
the one question he did not answer was he was asked how to pronounce his kid's name, and he didn't really answer the question, which I was a little bit disappointed. I was a bit disappointed in.
That's a bunch of symbols. You can't pronounce it.
Try to answer.
It's an algorithm.
He tried to answer, but he didn't answer the question.
X-Ash. No, there's an article how you pronounce it. X-Ash.
I know.
But Joe didn't follow up on it.
Yeah.
Joe really stuck on NeuroNet, your brain, and put something in there, and he really focused on that. Yeah. I know Elon really wasn't allowed to talk about the car stuff. So we may bring Elon on soon, but we may do a Tesla day with Kathy, our investment, and two other bulls, and then 2 bears. The biggest bear. If you guys have any big bears that you think on Tesla that you see on Twitter or on TV a lot, send them to Spencer. or just send them to Spencer Israel.
Yeah, no, that's fine. It's premarket@benzinga.com. Send
premarket@benzinga.com. Send the Bears, because we have the Bulls. We have the biggest Bulls in the company that that are around, from Gene Munster to whoever. We have connections to them. We're going to start bringing on some more of these like CEOs and analysts or people in the stock who are bullish and bearish, so you could hear their opposing viewpoints. And we're not going to let them bloviate. We're going to get right to like, here's this, round 1, round 2, kind of like a Judge Judy. Think Joel's your Judge Judy. And Spencer is a security guard.
I'm the bailiff. There we go.
The bailiff.
What's Dennis?
Nice.
I don't know. Dennis is
I don't know what I am half the time.
All right. It's 9:20.
I gotta go. I gotta trade this open. You're costing me money here, Jason.
I'm trying to get us off here.
Sorry, guys. Sorry. Love you guys. As always, if you're on social media, I'm at Jason Raznick on Twitter or in the Benzinga Pro chat room. Feel free to reach out and feel free to send us feedback. We got some feedback last week that someone had problems listening to the show on their phone. The easy solution right now is you can listen to it on premarket.benzinga.com, but I get it. You want to have other apps open. YouTube, you can listen to us, but you have to have YouTube Red to have it on in the background, and that's a $9.
I think
there's also an
Spotify
app.
too.
There's also an app. There's also an app you can use called Musi, MUSI, that lets you watch YouTube videos in the background on your phone. You don't have to have it open. But I want to thank Jason Raznick for spending a lot of time with us this morning. I know you got stuff to do.
Spencer, one last thing. I'm staying in work. Slack, someone just put in the chat room. I know there's weakness. I bought it up. I bought it down. I'm staying in Slack. The work.
I like that one too.
If it goes up, great. I win. I own a lot of it. If it goes down, I'm going down with the ship, and I'm going to have to get another job. So,
all right. 30's been like the Rock of Gibraltar in this one. We're busting out this morning. I don't know if it's earnings related, but man, if they finally cleared out this seller at 30, it'd been
it's up.
It's up 85 cents. I don't know if there's any volume with it.
Well,
Did they have?
It's been up last couple days.
All I know is I just want you guys to see this. I want you to see this. Like this. 1 second. Give me 1 second, then kick me off, Spencer. I want you guys to know what I bought work at, so you can hear them. Not just telling you. So my original buy on work, guys, was at the first buy was at $38.50. I bought it originally at $38.50. Then at $29.40. Then at $30.985. Then at $17.60. Then at $16.49. So I kept, I tried to do the New York Times, didn't fall as much, but I started buying it at 38, and as it went down, I just kept buying. Yes, I got a little more nervous. I made a position size, and I should have bought the same dollar amounts. I got more shares, but I didn't keep the dollar amounts consistent, which I think in hindsight I should do that when you're averaging down like that. But I just kept buying it up as it went down, because my conviction as it got cheaper stayed the same. The story stayed the same for me. And the people who are like shorted or don't like work, they just think Microsoft Teams is going to kill work. And that's what they think. So,
all right. Thanks a lot, Jason. All right, this is an old-fashioned show. We went almost to the open.
Yeah, exactly.
We used to do this on the regular, but all right. Dennis will let you go. Dennis is already gone. If you missed any part of our show, you can catch a replay on YouTube or a podcast on iTunes, SoundCloud, Stitcher, Spotify, or TuneIn. Thanks to Jason Raznick. And thanks to all of you in our chats, all three of them now, on the premarket.benzinga.com site, on YouTube, and on Benzinga Pro. We thank you for your participation as always. I'm sorry we couldn't get to more of your questions. We'll try better next week. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. We are now 40 seconds out from the open. Joel and I will be back with you at 3:40 to wrap up the week. Everyone, have a great rest of your Friday, and wherever you are, be safe as usual. Okay.